Hey everyone, welcome to the Triveni Investor channel. So in this weekend's video, we're going to discuss sugar stocks. But before that, I also want to show you how did I find that sugar is probably going to be the next sector that's going to do well. Okay, but before that, a disclaimer, this channel is purely educational channel and my objective with this channel and with my Twitter handle is primarily to help you understand how to use technical analysis for your investing and trading decisions. Okay, having said that, let's get started with today's video. First, we're going to discuss the charting scanner. So here I have my weekly scanner that I use for my scanning. So I use this on a daily basis sometimes if I have time, or I primarily run this on the weekends. Now this is the weekly scanner, and while I was going through the scanner, I found some sugar names. Now for example, if you just do a sugar, you will find a lot of sugar stocks in this scanner here. And then what I do is, yeah, you have Triveni here, and you also have Mawana as a sugar stock here. Now let's go to Triveni, and once you find a stock from any sector, now all you need to do is select sugar, and you see the filter industry sugar has been applied, and then click on sector FMCG, right? And now you need to remove this FMCG filter so that you get rid of all of this. I don't know why that works like this in charting, but this is how you can filter and find all the sugar stocks. Now, if you see in the weekly scanner, we have two stocks already in momentum, which means the long-term trend is already up for two stocks, and whereas the short-term trend is just changing for all these stocks here. Now, almost we have six stocks here, and for all these stocks, the short-term trend is changing. Now, for some of the stocks, the weekly would already been 100. We're not going to look at that, but for now, we just want to focus here and see there are six stocks in sugar space, and there are two stocks here which are in momentum. Now, this indicates that the sugar sector is probably picking a momentum, and that's when you take these stocks and try to look at trading view and you see what is the trend change and whether it's forming a major bottom, whether it's trying to head higher, and then you take a call. Okay, now that's how you can do a simple check to find which is the next big sector. Now you can also do this with hotels. Just to show you another example, now let's say you want to find, you're interested in hotel sector, right? Now what you can do is you can find here hotels, you click on hotels, and then you click on quick service restaurants, and then you close this, and you'll find all the quick service restaurants in your scanner here, right? So that's how you look at charting, and that's how I use charting at least. I hope that was useful. If you have any questions on this part of this video, then do let me know in the comments and I will help you resolve your doubts. Okay, so now let's move on to the stocks itself. The first stock that we have today is Renuka Sugar. This is one of the good companies, not a good company in itself, at least it has done a major turnaround from the fundamentals in the past. It's very good in terms of the turnaround part, and I think the stock has done really well in the last couple of years, and this stock is still in a long-term uptrend. Now, why do I say that? Now, this is a weekly chart that I'm looking at, and if you see the stock is still going up, right? So the higher high, higher low structure is still intact, and because of which I'm saying that this stock, the long-term trend is still up on the weekly charts. Now, remember, the stock can be in a long-term uptrend, but then the stock can be in a short-term downtrend on daily charts. Now, this is a short-term downtrend, but on the weekly charts, this is still an uptrend. Now, the primary objective for you, if you want to really find good trades, is to find when the stocks are just changing the trend in the daily charts. Now, on the daily chart, if you see here, so this is a weekly chart, but I'm just trying to tell you, now we had almost 7 to 8 weeks of consolidation, and this week we finally closed above that 7 to 8 weeks of consolidation, which is nothing but the daily trend is changing on the trend is changing on the daily charts, whereas on the weekly charts, we are already in uptrend. So when both the weekly and the daily is in an uptrend and they are in sync, that's when you will find very good opportunities. So remember, daily and weekly both should be in sync. Now, the other point to note here is this structure was similar. I observed this also in Suzlon before. We had two green candles, and in between these two green candles, we have almost 5 weeks of inside bars or tight consolidation. And also, if you see the volume surge, the volumes have been very good in these two green candles. Now, that's one of the ways to look at price action and to decide which stocks you want to go ahead and buy. Now, usually when a stock is at the bottom, now if you see here, we had a very strong dip here, and then we went up, we again came down, we again went up, and we again came down. Now, the contraction here, or the price rise and fall, is getting lesser and lesser. Now, from here to here, you see there's a massive fall. From here to here, that's a very less fall, and here to here, it's even lesser. Now, that shows that the price action is getting tighter and tighter, which means buyers and sellers are really finding it difficult to keep in balance, and one side will give away soon. Now, in this case, I am predicting that the sellers will give away, and the buyers will take over, and the stock will resume an uptrend. Okay, so that's a short overview on Renuka's technicals. Also here, the stock CCI was almost going to go bearish, and then we are now rising higher. So CCI also is at almost 7-8 weeks of high, and that makes it a very good candidate. And that's the first pick for today from the sugar space. Entry at 4.46.7, a stop loss of just 9%. All the stocks we're discussing today have very less stop loss, between 7 and 10%, and targets of around 40%. Right now, that's a very good 40% targets from here, which is nothing but the previous all-time high. Right now, this high is what I'm looking at. Now, obviously, the stock will head higher from there after some short consolidation. But if you're a swing trader, probably that's the point where you have to book profits. Or if you want to trail profits, you can trail profits as well. But if you're a positional trader, try to make this big. So keep trailing your stop losses, and you will make this a very good trade for yourself. So that's the first stock. Let's move to the second stock for today. It is Triveni Engineering. Now, Triveni Engineering also showed similar pattern like Renuka. Now, the stock is already in an uptrend. If you see, it's in a very clear uptrend. And again, this stock also had two strong green candles, followed by a lot of inside tiny bars where there was hardly any volumes. And now we are seeing some volume surge as well. But here the difference is the stock is already in a bullish momentum on the weekly charts, and the relative strength also is picking up. Now, the stock also has been in a tight consolidation since last year, November or October, November period, right? So since here, the stock has just been going sideways. If we break out of this tight consolidation, then the stock is going to head higher. Now, a lot of people ask me, how do I pick stocks and how do I pin down on stocks? These are the patterns that I look at. If a stock has been consolidating for a very long time in a very tight range, that is going to probably expand. Remember, in markets, after a tight price consolidation, there is going to be expansion, and that expansion will lead to bigger profits. Now, this also can go the other way around, but for now, it is breaking out from this consolidation. So that's how you pin down on stocks, and you try to find good stocks for your positional or swing trading. And these are stocks which will put you in profits immediately. Okay, now for that reason, this is a second stock. Entry at 304, stop loss of 9.5%. And we are looking for targets of 400 or 31% from here, which brings us to a risk reward of 3 times the risk that we're taking. Okay, so that's the second stock. The third stock for today is Uttam Sugar. Now, this stock is kind of outperforming the overall markets, especially if you look at Renuka and Triveni, they are yet to break out, but this stock already broke out 4 weeks back, and then we consolidated, and again we're heading higher. Now, again, look at the volumes here. Around the breakout zone, we had a massive volume here, and we had 3 weeks of consolidation. Now we are probably heading higher. Now, if you consider the other two and this stock will probably outperform the other two stocks, because we already had a breakout and we are already outperforming, and we had a very good outperformance in the last few months already, right? Also, this is a major support zone. Now, all these stocks are in uptrend on the weekly charts. Now, this is also a swing trading strategy that I am directly discussing. I discussed the swing trading strategy already. There is a video available on my channel. Do take a look at it and you will find it useful. So here, now this is going to be a very good candle if you kind of expand, and this is probably going to be the bottom. So that will be a stop loss, which is 313 or 10.6%. Entry at 350. Targets are going to be 36% or 475, which brings us to a risk reward of 3.38. Now, the first 3 stocks have a similar kind of a target around 35 to 40%, but the next 3 stocks are really good risk reward stocks. So let's move on. The fourth stock for today is Avadh Sugar. Now, Avadh Sugar is similar setup to Triveni and Renuka. Again, a beautiful long-term uptrend, which is still intact. We have seen some tight rejections over here, price rejections over here. Every time the price goes towards that level of, around 550 levels, it gets rejected, comes back down, goes up again, it comes back down, and goes up again, comes back down. Now, this is an inverted head and shoulders pattern. If you can note this, it will be good. Inverted head and shoulders patterns are really good, especially when the neckline is a horizontal neckline. Now, don't get confused with the words technicals, inverted head and shoulders, neckline, all of this. Just consider higher and higher lows. That's more than enough, right? So from here, if you see, we had a nice dip, then a more deeper dip, and now this dip is almost equal to this dip. That makes it an inverted head and shoulders, right? And now after 4 weeks of tight consolidation, we have formed an inside bar this week. Now, if we break out above the previous week's high, then this is also going to enter into good momentum, and we will head higher. Now, remember, the sugar stocks, they always move as a pack, right? When one sugar stock does well, ultimately other sugar stocks will start catching up, and the entire sector itself moves together. So it doesn't really matter if the fundamentals are good, fundamentals are bad. If you want to stick to fundamentally good stocks, it's totally fine, but sugar stocks tend to move as a pack. So it's totally fine if you just pick any 2-3 stocks and hold on to them for the next few weeks, you might get good returns. So this stock is a good entry. We have entry price at 570. we're going to keep a stop loss of 9.65, and here the target is slightly higher, 54%, which brings us to a risk reward of 5.6 times. That's a fourth stock for today. The fifth stock is Dwarkesh, which is again an excellent setup. All the sugar stocks have a similar structure, right? So again, a beautiful uptrend. The stock has not broken that major support zone over here. And here again, you have to note the fall in price. The price fell from here to here first. It went up again here. Again, the fall was even much smaller. Again, it went up. The fall was even much smaller. It went up. The fall was even much smaller. So when a price kind of drops lesser and lesser, and it goes to the same zone, and it breaks out above the pivot high over here. Now, pivot high is nothing but this high, the previous high, and if it breaks out and heads higher, that's an excellent setup to look for, because you expect that the price contraction is complete. We kept falling, contracting, and now it's time for price expansion. And now, just looking at the entire sector, I can presume that this stock was probably going to break out as well. We are seeing a slight surge in volumes here after 4-5 weeks of tight consolidation. Now, this stock has been consolidating really tight, so a momentum above 98 would be great for the stock, and you can look for targets of almost 60% here. So entry at 94, stop loss of 87, which is 7.4%, probably the least of all stop losses today, and we're looking for targets of 60% here, which brings us to risk reward of 8 times the risk we're taking. That's the fifth stock. The last stock today that we're discussing is Mawana Sugar. Again, a beautiful setup. Long-term uptrend is still intact, right? The high-low structure is still intact in the sugar stocks. Major support zone is this. We have not broken that support zone, and we have consolidated for the last 5 weeks very tightly. Now, if we break out above the zone of around 105 levels, then we are going to see much high levels here as well. Again, here the entry is 103.5, stop loss of 7%, and we're going to look for targets of 69% here, which is around 9.5%. 9.5 times the risk that we're taking here. Again, the risk, so CCI here has been excellent. It has been an uptrend already since here, and here we are just facing resistance. Once we break this, then we are going to head higher. Now, that's the 6 stocks that I want to discuss today. But since last week, I've started showing you the summary, just to give you a fair comparison of which stocks you can go for. Now, among the 6 stocks for me, obviously market cap wise, these are the best stocks. But if you want to take a slightly good risk reward setup, then for me, Mawana is right on top of my list because of the risk. Stop loss is just 7.2%, which means I can have a better position size here, and I can even look for higher targets over here. Now, the targets usually are around the previous weekly highs, around the previous all-time highs, or 5 to 6 times the risk reward that we are looking at, right? So here also Mawana has a very good PAT CAGR. Also Uttam has a very good PAT CAGR. So if you're looking for fundamentally good companies, probably Uttam, Dwarkesh, and Mawana might be in your list, right? Otherwise, all the companies have similar profile in terms of fundamentals. I don't see a major difference except Renuka. All of them have similar kind of profile, doing decent, almost similar ROC, except Triveni and Uttam. All of them have around 10% ROC. So you can use this table to see which stocks you want to really play along. I do not really invest in all of them. It's just impossible for me to buy all of them, right? I'll probably buy 1 or maximum 2, not beyond that, because if one performs well, all others are going to perform well as well. Probably 1 or 2 days behind or further, but I think all of them will do well going forward. So that's it for today. I hope you enjoyed my video. If you did enjoy, do subscribe to my channel and like this video, and do me a favor by sharing this with your friends and family as well. I'll leave you here. Otherwise, take care, stay safe, and trade safe. Until I see another video. Bye bye.